Stan Shamu joining us from IG in Melbourne now. Stan, good to see you there. Yeah. What's been going on in the currency markets? Is it reaction to the commentary from Jackson Hole or just some stop-loss orders or something like that? What's been going on?
Morning, Brody. Absolutely. I think it's all about Jackson Hole at the moment. I think the market was probably expecting a much bigger reaction in the price action there out of comments by Janet Yellen on Friday, but this didn't quite eventuate. I think this just really emphasizes the neutrality of the content of Janet Yellen's comments. Of course, she was quite balanced. She came out and spoke about the labor market, which was broadly in line with expectations, just really talking about that slack in the labor market and underutilization of the labor market as well. But of course this wasn't anything new at all, and in fact the fact that she just emphasized that the timing on rates will be very data dependent going forward was actually taken by a lot of analysts out there as a moderately hawkish shift, because of course we have seen data track well ahead of expectations recently, and if that's the case, then perhaps the Fed's June call for a hike in the federal funds rate might actually be very pessimistic, and in that case we might actually see this brought forward a little bit, and as a result I think the market really didn't know what to do with these comments from Janet Yellen. She did her job really, essentially just coming out very balanced, which is what she probably would have tried to do in such a situation where we've had a very good case for a better economic outlook, but at the same time she feels that there is still room for further dovishness going forward. But what we do know is that the Fed will be in no rush to raise the Fed funds rate, and of course they will try and remain as accommodative as they can, as long as the data doesn't really show any positive signs. So I think with that in mind, the US dollar has really continued its momentum, and that really was attributed to that weakness in the euro and of course the yen against the greenback, with central bank governors from the ECB and the BOJ just coming out and reinforcing a very dovish tone. Of course, we had Mario Draghi come out and just say that demand in the eurozone remains very, very benign, and of course he might need to take action soon to help lift the situation over there. So it really does look like the trade at the moment will be short the euro for a very long time, until we get a bit more commentary out of Mario Draghi himself. In terms of the Fed, I think going forward, the September meeting has now been tipped as the pivotal meeting. We will get an exit strategy and potentially a change in our projections by the Fed there, and that will give a better indication of what to expect post QE, and of course how the economy is perceived by the Fed going forward.
Just onto the equity markets, the opening calls from IG for the Aussie share market this morning?
We're actually calling it down 0.2%, so there's really nothing much in it. I think it's just really tracking some of the benign moves we saw in equities on Friday, but there is potential that we could actually see these losses extended a little bit, because I think some of the positioning last week was perhaps hoping that we will continue to hear some very, very dovish comments out of Janet Yellen, and at the same time I think for the local market it's all about earnings today as well. So I think whilst there is a lot of uncertainty in the broader macroeconomic space right now, perhaps the moves in some of these reporting stocks like BlueScope, Beach Energy, Caltex will really help dictate the momentum for local stocks. I suspect buying the dips might be the preferred strategy there further down the line, because we have seen some fairly good earnings, and these have really helped re-emphasize the fact that the economy could be starting to improve and reacting to those low rates at the moment. And at the same time, the Aussie dollar is struggling. It's below that 93 mark again, and we do know that a weaker Aussie is relatively positive for local equities, so that might be something to keep an eye on as well.
Just on to Japan as well, because there is a raft of data due out later in the week. I know you've been talking there about some of those currency moves. What's your thinking on the US yen cross there?
Yeah, I think those comments by BOJ Governor Kuroda really set the yen up for further weakness in the short term. Of course, Kuroda came out and really said that the BOJ will remain aggressive for as long as it takes to reach that 2% inflation target, and that it's actually still quite achievable. I think we've heard a lot of pessimistic comments about Japan recently, with everyone arguing that Abenomics isn't necessarily working, and of course there's no real solution to Japan's problems at the moment. But of course this confidence that came from Kuroda really did reinstall some yen weakness. We've seen the dollar yen pop to about 104.20 this morning, so it's at January highs at the moment, and this really will support Japanese equities today. We're actually calling the Nikkei up about 0.2%, and that's in sharp contrast to most of the equities across the region. So with a lot of data set to come out of Japan this week, I think expectations are shifting towards the fact that if we don't see a significant enough recovery out of Japan, then at some point we should expect further stimulus from Kuroda, who is obviously very focused on reaching this 2% inflation target. So I'm sure these Japanese equities will be bought on the dips as well.
All right, Stan, have to leave it there. Thank you so much for that.
Cheers, buddy.
Let's have a look at some of the stocks to be watching now at the start of trade.